In 2014, AMD had a market cap of $3 billion. The stock was trading under $2. Analysts were writing the company off as a dead man walking.
Fast forward to today, AMD is worth over $360 billion. That's a 66-fold increase in 12 years under one CEO.
Lisa Su didn't just save AMD, she turned it into one of the most important companies in the AI revolution. And right now, in April 2026, the next chapter is about to begin. Meta just signed a $60 billion GPU deal, the MI450 chip launches later this year, and AMD just set records on AI inference benchmarks.
The question isn't whether AMD can compete with NVIDIA anymore. It's how much of the AI market AMD can capture from here.
This is episode 74 of Charged Alpha, our deep dive into advanced micro devices, ticker AMD. Let's get into it. AMD was founded in 1969 by Jerry Sanders in Silicon Valley, right at the dawn of the semiconductor age. For decades, it was the scrappy underdog to Intel in CPUs and to NVIDIA in graphics cards. But the company you see today looks nothing like the one Sanders built.
Modern AMD is a fabless semiconductor company headquartered in Santa Clara, California, with about 26,000 employees. Fabless means they design the chips but outsource manufacturing, primarily to TSMC in Taiwan. That decision, made under Lisa Su, was one of the most important strategic calls in the company's history.
The business runs across 4 segments. Data center is the growth engine. That's EPYC server processors and Instinct AI accelerators like the MI300 series. Client is the consumer side. Ryzen CPUs for PCs and laptops. Gaming covers Radeon GPUs and custom chips for consoles. And embedded is the Xilinx FPGA business they acquired for $49 billion in 2022.
Revenue in 2025 hit $34.6 billion, up 34% year over year. But the story is really about data center, which did $16.6 billion and is growing at 80% annually. That segment alone is bigger than all of AMD was just 3 years ago. The MI300 AI accelerator is already deployed by 8 of the top 10 AI companies globally.
And the moat is layered. AMD pioneered chiplet architecture, modular chip designs that give them better manufacturing yields and faster product cycles than competitors. They have an exclusive TSMC partnership for the most advanced process nodes, and they're the only company in the world that can offer both high-end CPUs and competitive GPUs as a complete platform. That matters to hyperscalers like Meta and Microsoft, who want alternatives to buying everything from NVIDIA. Let's talk about the person at the center of this transformation. Lisa Su has a PhD in electrical engineering from MIT. She spent 13 years at IBM, where she led the shift from aluminum to copper interconnects, a foundational innovation that improved chip performance across the entire industry. She served as CTO of Freescale Semiconductor before joining AMD and becoming CEO in October 2014.
When she took over, AMD was near bankruptcy. She made 3 bets that changed everything. First, she committed to the fabless model and partnered with TSMC instead of trying to compete with Intel's in-house factories. Second, she invested in chiplet architecture when competitors called it a gimmick. Third, she pivoted aggressively toward data center and AI accelerators, recognizing the market shift earlier than most. Every one of those bets paid off. She's delivering MIT's 2026 commencement address, and Wall Street considers her one of the most effective executives in technology.
All right, let's dig into the financials. AMD at $221 per share with a $360 billion market cap. The trailing PE is 83 times. That's not cheap.
It's not, and context matters here. AMD is a high-growth semiconductor company in the middle of an AI-driven revenue explosion. The forward PE drops to 31 times, and the PEG ratio is 0.62, well below 1. That tells you the market expects significant earnings acceleration, and the current valuation is actually reasonable relative to the growth rate.
What about EV to EBITDA?
51.7 times, elevated, but AMD is scaling margins rapidly. Non-GAAP gross margins hit 54% in Q4 2025, and guidance for Q1 2026 is 55%. That's a massive improvement from the mid-40s range just 2 years ago. Operating margin is approaching 15% and rising.
Revenue trajectory?
Full year 2025 was $34.6 billion, up 34%. Quarterly progression shows the ramp. Q4 2025 hit $10.3 billion, up 34% year over year. Q1 2026 guidance is $9.8 billion, showing 32% growth. The data center segment alone did $5.4 billion in Q4, up 39%, and it now represents over half of total revenue.
Cash flow?
Operating cash flow was $7.7 billion in 2025, with free cash flow at $5.5 billion, both record levels. The balance sheet is clean. $6 billion in cash versus $3.2 billion in total debt. The debt-to-equity ratio is under 5%, and interest coverage is an incredible 53 times. This is a company with enormous financial flexibility. Overall, AMD's financial health is strong. Revenue growth is accelerating, margins are expanding, cash generation is robust, and the balance sheet gives management room to invest aggressively in AI without financial strain.
The analyst community is overwhelmingly bullish. Strong buy consensus, 35 buy ratings, 10 holds, and 0 sells.
The average price target is around $275, with a range from $220 on the low end to $365 on the high end. That implies about 24% upside from current levels.
Notable calls?
Bank of America has a buy with a $290 target, arguing the MI450 ramp could surprise to the upside. KeyBank is at overweight with $320, focused on hyperscaler diversification, accelerating faster than expected. Morgan Stanley is overweight as well, with a buy before earnings thesis tied to AI momentum.
And last earnings.
Q4 2025 results dropped on February 3rd. AMD beat on both lines, EPS of $1.53 versus the $1.24 consensus, which is a 23% beat. Revenue was $10.3 billion, beating estimates by 6%. But here's the interesting part. The stock actually fell 8 to 17% after the report because Q1 guidance of $9.8 billion implied a sequential revenue decline. Wall Street wanted to see no slowdown at all.
Bull case number 1. The MI450 and Helios platform launch in H2 2026. This chip features 432 gigabytes of HBM4 memory and 1.4 exaflops of AI compute. It's competitive with NVIDIA's GB200, and if it delivers, it could fundamentally shift the competitive dynamics in AI accelerators. OpenAI is already building a 1 gigawatt data center with MI450 chips.
Number 2, the Meta deal. $60 billion over multiple years for AMD GPUs. This is the largest merchant GPU contract in history, and it signals that hyperscalers are serious about diversifying away from NVIDIA as sole supplier. Where Meta goes, others tend to follow.
And number 3, the complete platform advantage. AMD is the only company offering EPYC CPUs, Instinct GPUs, and Xilinx FPGAs as an integrated solution. The Helios rack-scale system bundles all of this together with Pensando networking chips. Hyperscalers can get their entire data center stack from one vendor. That's something even NVIDIA can't offer on the CPU side.
Now the bear case. Number 1, NVIDIA's CUDA ecosystem. This is the elephant in the room. CUDA has 15-plus years of developer investment, massive library support, and deep optimization. AMD's ROCm alternative is improving but still materially behind. Most AI researchers and engineers default to CUDA, and switching costs are real. Until ROCm reaches parity, AMD will fight for every customer.
Number 2,
Valuation. AMD trades at 83 times trailing earnings, which is actually higher than NVIDIA's 36 times, despite NVIDIA growing revenue faster. If the MI450 launch slips, or if hyperscaler CapEx pulls back even slightly, multiple compression could be severe. The market is pricing in flawless execution with zero margin for error.
and the third bear argument.
Concentration in geopolitics. AMD is increasingly dependent on hyperscaler AI spending. Meta, Microsoft, Google, OpenAI. If any one of those customers delays or cuts budgets, it directly impacts the growth trajectory. Plus, US-China trade restrictions remain a wild card. AMD already took an $800 million write-down on MI308 inventory tied to export compliance. Further restrictions could eliminate an entire growth market.
Let's stack AMD against the semiconductor heavyweights, NVIDIA, Intel, and Qualcomm.
NVIDIA is the clear leader in AI accelerators with over 80% market share. But here's what's interesting. NVIDIA trades at just 36 times earnings despite faster revenue growth. That valuation gap exists because the market views NVIDIA as the established winner and AMD as still proving itself. If AMD's MI450 closes the performance gap, that valuation relationship could invert.
And Intel?
Intel is struggling. Negative earnings, manufacturing delays on their 18A node, and a cash-to-debt ratio of just 0.4. AMD has taken enormous CPU market share from Intel with EPYC, and that trend is accelerating. Intel is essentially AMD's best advertisement for why the fabless model works.
Qualcomm?
Different lane. Qualcomm is mobile-focused, with Snapdragon trading at just 18 times earnings with a 2% dividend yield. They compete with AMD in edge AI compute, but not in data center. It shows the valuation spectrum, mature growth at 18 times versus AI-fueled growth at 83 times.
Options on AMD are telling a moderately bullish story. Put-call ratio at 0.55, tilting toward calls.
Implied volatility sits at the 34th percentile, middle of the range heading into April 30 earnings. That's lower than you might expect for a name this volatile. Call open interest is clustering at the 240, 260, and 300 strikes, suggesting traders expect a move higher post-earnings. Put protection is concentrated at 200 and below. The moderate IV means options aren't excessively priced, which could favor buyers heading into the catalyst.
Insider activity at AMD shows a mixed picture. 2 buys and 5 sells over the past 12 months.
The bullish signal is CTO Mark Papermaster, who made 2 open market purchases totaling over $4 million, including a $1.3 million buy at $215 in January 2026. That's the Chief Technology Officer putting real money behind the company's technical roadmap. On the other side, CEO Lisa Su sold 225,000 shares for $37 million in August 2025. That's almost certainly diversification and tax planning after a massive run. Net-net, the CTO buying is a positive signal. He's the person who would know best whether the MI450 is on track.
What are the key dates and metrics investors should track?
3 catalysts to watch. First, Q1 2026 earnings on April 30th. The market needs to see the $9.8 billion revenue guide hold, and more importantly, commentary on MI450 pre-orders and data center pipeline. Any deceleration in data center growth will punish the stock. Second, the H2 2026 MI450 and Helios launch. This is the single biggest catalyst for the bull case. If it ships on time and delivers competitive performance, AMD's AI revenue could double. If it slips to 2027, the bear case gets a lot stronger. Third, hyperscaler CapEx trends. Watch Meta, Microsoft, and Google's capital expenditure guidance each quarter. AMD's growth is directly tied to how much these companies spend on AI infrastructure.
Here's the bottom line. AMD under Lisa Su has gone from near death to competing at the highest levels of AI and data center computing. The numbers back it up. 34% revenue growth, 80% data center growth, expanding margins, and a fortress balance sheet.
At 31 times forward earnings with a PEG ratio of 0.62, AMD is actually reasonably valued for the growth it's delivering. The key variable is execution on the MI450 launch. If AMD can close the gap with NVIDIA in AI performance, while offering platform-level integration that NVIDIA can't match, the current stock price could look like a bargain in hindsight.
The metric to watch is data center revenue as a percentage of total. It's already over 50%. As that number climbs towards 70%, AMD transforms from a diversified semiconductor company into a pure-play AI infrastructure provider, and the valuation re-rates accordingly.
Lisa Su said it best at CES 2026. AI is the most important technology of the last 50 years. And most importantly, AI is for everyone. You ain't seen nothing yet. Coming from the CEO who turned a $3 billion company into a $360 billion one, that's not hype. That's a track record talking.
Love that quote. That's going to do it for episode 74 of Charged Alpha, our deep dive into advanced micro devices, ticker AMD. And hey, if you want to run the same research workflow we use to build these episodes, everything's free at chargedalpha.com. 11 screening tools across stocks, ETFs, options, crypto, bonds, REITs, commodities. No sign up, no paywall. The same data that powers this show is sitting there, waiting for you to run your own screens. Check it out. Until then, I'm Hudson Thomas.
This podcast is for informational and educational purposes only. Nothing discussed today constitutes a buy, sell, or hold recommendation for any security mentioned. All investments carry risk, including the risk of total loss of principal. Past performance does not guarantee future results. Always do your own research and consult with a qualified financial advisor before making any investment decisions. The hosts and producers of Charged Alpha may hold positions in securities discussed on this show. This episode was researched, written, and produced using AI-assisted tools. All data has been aggregated from publicly available sources and may contain inaccuracies. Data is current as of the recording date and may have changed.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.